Hello friends, welcome back. This is Rajadhar, Managing Partner at Finogent Advisory, and I welcome you to the new session on buybacks. And before I proceed, I would request you to please follow us on social media channels like Facebook, YouTube, so on and so forth, and keep subscribing to the new trends and the new articles that we bring for you. So today the session is on buybacks, and this will actually be covering up on: are the buybacks good? Should we opt for it? How would it benefit, and when they are bad? So these are the four aspects that we're talking today. So now let me first tell you the very notion or essence of a buyback. So if there is a company and company is sitting on the tons of cash, so now it has four alternatives. First alternative is capex, spend the money, get new factories set up, get a new project on board, so on and so forth. So first is the capital expenditure. The second option is to acquire another companies and expand its line of products, whether vertical or horizontal, so on and so forth. So now this is the second. The third option will be to pay dividends to the investors, and the fourth option is to buy back. Now traditionally, what does the buyback means? Buyback means if a country is having 100,000 shares, that means 1 lakh shares outstanding in the market, और अगर उसमें से उसने 50,000 shares निकाल दिए वापस, so only 50,000 shares remain in the market. So that means the total outstanding में से they take out the rest of the outstanding shares. This is what the concept of buyback is. Now the rationale comes, why would a company come with a buyback? Why would a stock which is currently trading at 100 bucks, कंपनी सेइंग कि ठीक है मेरा स्टॉक 100 रुपए पे ट्रेड कर रहा है, मैं आपको जी 150 रुपए दे दूंगा या मैं आपको 200 रुपए दे दूंगा, आप मुझे मेरा शेयर दे दो, एंड वी रन फॉर इट. सो वेदर आवर रनिंग इज वर्थ इट और नॉट. सो देयरफॉर if in the current market trend or any applicable market trend, if the company is not able to foresee any business growth and is sitting on the piles of cash, it may go for a buyback. If the company thinks ki, okay, I will acquire, but I think that if I acquire it, I won't be able to have that gel or the since this is happening, so that it will give me multiples of the income and acquisition may fail, so therefore they might not even go for it. Dividends they are already paying, but since they are sitting on tons of cash, they might be buybacking it. So this comes to the new point, when the buybacks are actually bad for investors. First and foremost, if the company is thinking ki, okay, market has crashed or the stocks is trading at a very low price, and the company believes that no, my stock is not worth 100 bucks right now, I think in next 1 year term it will go to 300 or 400 bucks. So therefore it is an opportunity for a company to buy back the share at a discount. But since it is trading at 100, they are willing to pay you say 150 bucks or 200 bucks for that share and take a part of share out of you if you exercise that buyback option. So actually they are buying it at a discount from the market, and now they are reducing the outstanding shares. Now when the market goes up in a year or so, they will again get those shares into the market at a higher price. So this is one option or one way that companies are actually doing. The second way is actually to artificially inflate the figures. So buyback में क्या होता है, आपका number of outstanding shares कम हो जाते हैं, and there is a metric called as the earning per share. So earning per share is total earnings of the company divided by number of shares outstanding. Now if the outstanding shares had been 100,000, 50,000 has been taken out, only 50,000 is remaining. So without you performing better, without company giving exceptional returns, you have just reduced the number of the shares outstanding. Now the company will say, okay, our earning per share have increased, which for the short term may be good. And they are also bad an option when the purpose of the buyback at the corporate level is actually to jack up the prices, which many companies do when they are nearer to acquisitions or nearer to so and so forth, or they want to inflate the prices or show them good to the investors, which are actually the institutional investors into the companies. So those are the times when it is actually the bad part. Now second things, when it is a good thing. Good thing is that when Warren Buffett has also said that I will be willing to go for a buyback only and only if the price of the stock is well below the intrinsic value, and I will buy back my own company shares. So Warren Buffett says that I am willing to buy back my own company shares when it is cheaper than its intrinsic value, its fundamental value. Then it is beneficial for the company and also for the shareholders. And if the company is trading as 100 bucks, its intrinsic value is 50 rupees, and they are buying at 200 rupees, that means they are buying at a premium to what is actually worth, then that means you are eroding a shareholder value. So therefore an investor has to see that whether the shareholder value will be created or whether it will be destroyed. That is a matter of fact. The another factor to see is, if we see current scenario where we have seen Sensex plummeting from, because of this COVID-19 pandemic, from 40,000 down to 26, 28, and now currently it is around 30,000 bucks. And now company comes with, okay, I want to do a buyback. Should you opt for it? Do you see that it is the end of the world for that company? This company stock will never go up. So if you say कि okay भाई मेरे पास 1000 शेयर हैं, आप 200 शेयर को बायबैक कर रहे हो, please take 200 shares. So that means you yourself are not quite confident that the price will go up, and therefore you are strictly offloading them. But what has been the company's objective on this? Do they really are sitting on so much pile of the cash that they actually are opting for a buyback? So therefore you also have to see, yes, had the market been at the all-time high and that particular company is not performing, then we can understand, okay, the market is trading at 40,000 level and this company for the quite 6 months, 9 months or a year has not been performing, the stocks has been down in the dumps, now they are coming with a buyback. You can think about exercising the same. But if there is a company which is a good performer and has been a good return on equity, has been a good cash flow, has been good operating margins and the gross margins, and उनके dividend payout ratio भी साल दर साल बढ़ रहे हैं, then there is no objective or no rationale for you to go for a buyback for that share. So therefore it is very important that you consult your financial advisor whenever such buyback options come, that whether you should actually go for it or not. And please do let me know if in case you are actually having, because many of the companies have recently also come with a notification on the buybacks, and if you do have any queries, please do write to us, connect with us on the social media channels, and we will be very happy to help you on this. Thank you so much, and be connected and stay safe. Thank you.